points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in on March 9th, 2022, and the chip stocks are about to go crazy. Today we saw the volatility. It came back. You saw the swings. We were down 1.5%. We went up 2%, only to sell off and have a pretty nasty close towards the lows. So we got a lot to talk about, but the one thing we saw stability in, it was surprisingly the chips. Even I would want to say even oil, but it was a crazy day. But the chips, I have something that we need to watch. We still got the CPI on Thursday, and we are still awaiting some escalation. So we got a lot to talk about. I'm going to go over everything that happened in the market today. Then I have the plays that I made today, and we're going to talk about wheat. Yes, we are. And then I'm going to talk about the chips next. And then we got the plays for the rest of the weekend CPI. So drop your thumbs up on the video if you find it helpful. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. It's free 99. It is. It really is. But before we get into the keys, I want to start with the pretty picture here. And this is the retail buying versus the hedge fund. So thought this one was interesting, but literally from last week, February 28th to March 3rd, you saw over $4 billion sold off by the hedge funds. And this is from Bank of America here, but you saw retail buying just over $1 billion. So retail corporate institutions, they've been the buyers, and it looks like the hedge funds are the ones selling. So this was interesting. A lot of people are talking about it again, the swings, and why this is so important. I thought I'd mention this in the beginning. We are waiting escalation. You're watching these back and forths again. Today was an absolutely volatile day. There was a lot of different headlines, but until we get something of peace talks, that's really going to be the key here. But a lot of people have talked about it. The minute that you do get those peace talks or anything really calming down, well, that's when you are going to probably see a massive rally. So keep that in mind. However, like I said, we are waiting on escalation. That's what we saw today. We still have CPI and all of that, but what you saw today, those volatility swings came back. Remember, we started the week, it was just a big sell-off. You didn't get the up and down, but that go up 1%, down 2%, and do that flip-flop, that has came back, and that is showing you a lot of uncertainty. And the crazy part is we saw that on every asset, literally from the futures down to the single stocks, the industry. First it was oil, then tech. You saw a bunch of flip-flop today, and then the story escalated, the big piece of news in the morning, and then what happened? Biden came on. You saw the market rally around that time, but we did do a ban there on Russian oil imports. That was big news, and then there was also a subtle response back by Russia banning exports. We'll talk about this when we get to the news, but there was that. But really what a lot of people are talking about, the liquidity is not being good, and even what you're seeing with these ups and downs, it is showing you that liquidity is bad, and right now the market is very sensitive to any news, and you really saw that highlighted today. And then for the cherry on top with liquidity and sensitivity, the one thing that happened here, the rate hike odds, they keep increasing. This was very, very weird because it's getting back to before February, before you had the invasion and all of that. So this one is getting very key because now this has to do with escalation. We have the CPI this week. If this keeps getting worse, this is definitely going to be something to watch. But that really stuck out. We'll talk about it here in a little bit. But before we do that, let's get to the last pretty picture. Here is the volatility of wheat. And like I'm saying, a lot of different assets went crazy today, even down to the bonds. But what you are seeing here is the volatility of wheat futures compared to the S&P, and it is hitting 60%. I think it is the second highest out of all the other commodities. Again, you got nickel, oil, and all of that, but the volatility itself, given the fact that wheat doesn't move, this is going up. And if you were watching those moves today on futures, it started out higher, then it came down to a limit down 10%. Then with all of the volatility in the market, it was only about 1% down and still up over the last couple days. So again, biggest wheat rally in about 60 years. But now coming to the rest of the week, and like we said, that's CPI on Thursday, that is going to be crucial. And what I just showed you with the Fed futures, if that continues to hit a new low, that is going to be the negative part, and that really could cause a lot of panic. Again, we will see when it happens, but now coming into the CPI, it's on Thursday, not tomorrow, but the thing about it this time around, the number isn't going to be scary. We're probably going to talk about this on the watch list tomorrow, but now it is really about the trend and guidance, and that's why coming into tomorrow, we're going to see what happens. You really need a real bounce with a peace and ceasefire talk to really get something sustainable, but coming into tomorrow, I really don't think it matters unless the commodities go crazy or they do have a complete collapse and kind of top out the craziness we've seen over the last week and a half. Otherwise, I wouldn't be surprised to watch the market really trade like we've seen over the last 7 days, just with a little bit more whipsawing now. And then on top of it, once we get the CPI on Thursday, I think that's going to be kind of a confirming move unless any other escalation can overtake it. So depending on the CPI and then leading into Powell, if the bonds or Fed futures don't snitch, I think they will, but I think the reaction will come depending on whether or not this situation gets better or worse with everything going on in Russia. So coming into the company news and events, these were the big headlines today, and you're like, wait, everybody left, man, this is pretty wild, but Coca-Cola, Pepsi, Starbucks, McDonald's, and PayPal, they have all pulled out of Russia, but now there's a lot of reports discussing the social dilemma now as much as a business dilemma. You probably saw it today, it was like one after the other, but a lot of people are talking about the business conflicts because if Coca-Cola is supplying McDonald's and McDonald's wants to pull out but Coca-Cola doesn't, but that's one of their biggest clients over there, it kind of makes sense for them to do it. So we're going to see how this plays out. You might see a lot of it, and a lot of the pullouts are being very specific. I know Starbucks, or I believe Coca-Cola, or I think Pepsi, they said they're not going to be selling any soda, but they will continue to provide milk and baby powder and stuff like that. So keep your eye out for that. Again, we're getting a lot of these developments, but the real question is going to come down to what happens to Russia and their financial system. And now this came out. We're going to see if this has an effect on the futures even coming into tomorrow, but this is a very big update, especially if we see something happen. But Fitch, they have cut the Russian government bonds to the second lowest level, and they say that they see an imminent default. This is not good at all. So if they end up being correct here, there's been a couple of back and forth, even some news after hours on Russia changing some of their forex controls and stuff like that. But this is a big headline. Any of that credit stress, we are going to be watching. And again, if that leads to any other liquidity bonds or any other problems, there might be an early snitch on there. So definitely keep your eyes out for that. And then finally, Russia said they will be restricting some raw material exports. This was kind of the rebuttal that we got, and we saw the market go down a little bit. That correlated, but the thing is, the order was very vague on details. It didn't mention the specific commodities or products. It really was not specific at all, and they said they will be defining the products as well as who it will be affecting in the next 2 days. So we'll see what happens, but other than that, there wasn't any other crazy news. A lot of the companies pulling out, a lot of people talking about commodities, the volatility with wheat, nickel, that Chinese billionaire who is down at least a couple billion, I think now, on his short. He owns the biggest nickel company out there, but a lot of crazy stuff with that. But other than everything else, all about oil, the price of commodities, what we're doing and what we're waiting for, and then how Russia is going to react. And it looks like they are looking to cut off the world from materials and oil. So we will see what happens. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 stocks that I'm looking at coming into tomorrow, but we talked about this on stream. If you are looking for any plays, whether it is wheat, aluminum, nickel, commodity, oil, it does not matter. The real question you got to ask right now is, do you think things are going to escalate or not? That will determine your dip. That is definitely something everybody needs to understand right now, because with all the uncertainty, we're playing these like chess moves, waiting for a move, then waiting for the next move, it is very hard to put a price on things. And again, those volatility moves that we saw with wheat and everything else, this really highlights it. It is very hard to put a price on things. So the real question you are answering with any dip, if you think, okay, well, things are slowing down, or if you saw it today, some names, even Alcoa, over the last few days, they've been going negative, even the defense names. You've seen this before, but the question to determine, all right, this is going to be an opportunity, is whether or not we see more escalation. Essentially, if you're going to be buying any dip on any of these plays, you have to ask yourself, do I think this situation will get noticeably worse or more escalated or new than we've seen in the last couple weeks? And that's what happens after enough time of bad news, and that's what we're playing. But why this is important, because you've seen this happen, and we might start seeing this stall, or at the very least, that's what a lot of people are waiting for with commodities. Again, this has been a historic run. People are saying, all right, when does it like top out? And then that sets in, and then we kind of trade between the higher ranges. But remember, you saw that with oil when we made the B&O play. It topped out, came back down, the next day it dropped, and then you saw everything go crazy. So it was already up substantially before that. So this is what I'm saying, because a lot of these plays, they've been moving everything from fertilizer to commodities, and a lot of people are saying, oh, well, do I get in or not? You have to ask yourself, do you think it is going to escalate? And that is what's going to give you the answer, and make sure you at least don't get totally clobbered if you are wrong. So we will see what happens, but we got to start there. As far as the plays, like I said, I think the chip problems, those are going to start what's coming up next. Again, we had a lot of headlines there related to China helping out and a bunch of other things, but people are already talking supply chain disruption. If there's any more escalation, we were even talking about the boats and the ships related to wheat. Well, I don't think it's too far off till we start hearing about chips. So I'm sure I'll make another video on this, especially if we start to see this materialize. But I do think the chips will go crazy. We already have a play on ALGM, and that one was one of those scanner plays, but it accounts for this. But I'm going to be watching them. Those plays held up, but then also Intel. Think it will be interesting, but essentially, I either think we'll get it soon in the next week or so, or at the very least by earnings. I think the chips and lead times and all of that, it could start to get interesting. So definitely keep your eye out for that. That is the first set of plays. Then the second one, Boeing. We talked about this. Again, remember, we sold out of that expensive play yesterday and rolled over. Well, I'm waiting for the double dip, and I like what I saw today. This is what I wanted, but that volatility, the up and down, if you don't notice what happened, literally the puts are the same price. All of the Boeing puts, even the rollover, they're practically the same at the ask there. Very, very wide spreads, and again, the lack of liquidity, but the puts are the same price, and now the calls are a little bit more expensive after that little run up and pop and all of that. So I'm waiting for this. Keep this in mind again over the end of the week, leading into next week, especially with the CPI. Boeing is definitely one to watch at these levels. So it's going to be a game of musical chairs there on the premiums and option chain. So watch out for that. That is the second play. And then finally, Kellogg's and Coca-Cola. We talked about this on the watch list. We had those food plays and they ended up working. I did sell the final performance food group. It's like 300% or something, but Kellogg's and Coca-Cola, they reacted, and that's something we saw today. I think commodity prices kept going up. The volatility is holding up with commodity food and those prices, and now it's starting to hit these companies. Remember, these are their input costs, and really across the board today, you saw a lot of them get clapped. So premiums already went up, but if we do get any sort of slowdown or one of those, all right, is it going to calm down and maybe we get more escalation moments? I am going to be looking for the double dip. So watch out for that. As far as everything else, I really didn't even trade that much today. Like I said, I sold out of the performance group. Again, we had two of those plays. I sold the final one out today. That was good. And then I bought CVE. This one, it came up on the option scanner. Again, brand new option over here, but there was a lot of volume before we got into there. I got these at 70 cents. I think I only bought like 5, so about $300, and they went up, and literally it was like towards the middle of the day during Biden's announcement. I think they started dropping a little bit before. I think it was like right here. Then it came up and then had the big drop. But this came up. They're a Canadian energy company, and literally, if you didn't see it today, day. It was a major flip-flop, but every single energy name you could think of, they all went crazy. Anything with energy labeled to it, they all started to rally. So again, welcome to the commodity craze of 2022. But those are the only plays, still holding all the other wheat plays. If you want to update to see how it looked today, the puts actually got clobbered. I think this was here at the end of the day, but the puts got clobbered. They were holding up down 60% on those. Again, even after the volatility and down you saw, and then the calls, they came up. We're still up about just under 700%. So had $6,000 more of profit yesterday. Still got about $10,000 there. And again, we have till October. I haven't thought about ghetto spreading it yet. Like I'm saying, I'm just waiting for this day of a limit down, or excuse me, no limit up or limit down. And today was the first time we had it. You got a limit down on the downside. We'll see what happens tomorrow. But like I'm expecting, I think this is going to take more time. And with it being seasonal, the fact that it's already moved this much, we're going to really either need a very good negative development to bring it down, or it's going to find that range. And once I have a better idea of pricing, I could start to decide, okay, I either double dip, ghetto spread, take profits, do what I need to do. So I'm watching that. Good luck if you're in that play. Again, look at your own account and be smart about it. So that one was always awesome. But watching wheat tomorrow, those are the rest of the plays. Still going to be keeping an eye on Alcoa. Haven't gotten back into it. The premiums are still up there, but I think with enough time decay, these could be good. But this is the question, is this one of the buy the dip moments there? Again, they are one of these aluminum companies, so watch out for them. Coca-Cola, again, they sold off. This is a pretty big move for them. They've been leading pretty good. They didn't react too much at the news. I think most of it was priced in throughout the day. Again, a lot of people were already talking about it, so watch out for that. Then ARC, I forgot about this one, the puts from yesterday. We opened up the day and they were up at like 9 cents. Remember, we got them at like 5 or 6 cents yesterday, so I decided to sell 70 of 100 there right in the morning. I think I got like 9-10 cents for them, and they actually even held up even between like 7 and 8 for a pretty long time. Kind of sold off throughout the day, so we got those free, holding 30 of those remaining, but gonna be watching that. I still think it's a pretty interesting play. Watch Piedmont. This plays up still 100%. Again, lithium related to the commodity stuff, and then there was like LAC after hours. Another lithium company is up like 17%, so we'll see what happens with that. But watching them, watching B&O, I was considering ghetto spreading them, but thought I'd want to wait a little bit. Again, the hot season for oil is summer, so we're going to see, but there's great opportunities to ghetto spread. Watch XOM, even Chevron, they were all over the place, but we'll see if we get the cool-off day. Their cool-off day, it has a red candle, but, I mean, you can see the chart of volume. But again, another one of these wacky, wild moves here in the oil space. But watch them. Facebook, they were up like 3-4% and then came down, but watch out for them again at key levels, 190, and they've been moving a lot. Might be good to trade some of them again. Remember, we did that a couple weeks ago when they started moving at like 220 or something like that. So going to be keeping my eye out for them. Kellogg's, like we said, Airbnb, watch if travel recovers. Again, Uber did good as well too, but this was a big one, especially after the carnage yesterday. So if there's any escalation, anything like that, keep your eye out for that. And then TLT, I think it might go lower, but this all depends on the Fed futures here. Again, if the Fed futures start to go crazy, this is really going to be a fat signal. Again, if this starts to go down before everything else, or even after the CPI, it will really say a lot. And at that point, I think you're going to get a lot of bond volatility, and this will point to, well, the Fed is about to move very, very, very aggressively, and that means higher and higher rates, maybe faster than we expect. So we'll see what's going to happen, but I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, shout out to people who do it when they don't have to. But the code loves you. I love you. I will see you in the morning. Let's go.